Hello and welcome. You're watching KYC. Now, domestic facing is the way to go. Infra is one of those plays. I'm Harsh Saita. With me is Anushi Vakaria, and you're watching Know Your Company. On the infra side as well, there's plenty happening on the water infra side. And of course, a lot of this backed by the government, but also with regard to recycling of water, and that entire theme could be a big theme of the next decade. And therefore, we've taken a newly listed company, Enviro Infra, and we are trying to break it down today on KYC. Let me first start off with the first question. The first question that I have is with regard to cash flow. And I say this because the cash flows, and we look at those numbers, look extremely weak. Why is that so? Government contracts, Anushi, it's fairly normal for a company of this kind of a size, as well as in this industry.
Delays in Jal Jeevan mission budget as well that impacted the cash flows. Yeah.
Correct. So, and therefore, I'd want to know whether this can unwind and unwind quickly, the timing of it, and what are they doing about it? Is this going to be part of the business model? Is that a given now? And should an investor consider it as just part of the business model, right? The second piece is with regard to the top line. Where does that go 1 to 3 years from now? Very, very strong growth is what they're penciling in. 35 to 40%, we spoke about that. And, you know, when you're looking at that kind of a growth, can you continue to grow that way for the next 3 years, 5 years? What is the visibility like? They're currently at just about 1,000 crore, trading at around 4 times sales. Of course, this extremely fast growth, plus with it, the O&M contracts which will come, which is the maintenance contracts, if I can call it, and along with it, the renewable energy setup that they're doing. All of that, what does it do to top line, therefore, over the next 1 to 3 years? Mix, government versus non-government. This will also help us understand how much of diversification they're trying to build in, and therefore, this part of the business will have better cash flow. So that is the other positive which I'd want to try and understand and try and get a sense of. What's the size of the opportunity? A lot of people peg this at around 5 to 6,000 crore. Now, 1,000 crore in terms of top line that this company does, can it continue to hold market share? Is the opportunity size only going to grow from here? So all of those factors. The fifth piece is now you've got such a good margin business, and you look at the margins. Isn't competition a risk? And this is something I wonder about. In a business which is doing 30+% margins, why wouldn't more competition come in? Why wouldn't the likes...
We've fairly seen a lot of new listings in this particular area, which we'll cover about later.
Denta Water as well.
Concord Enviro as well. EMS was already there. So a couple of new players which are already in picture.
So I'd want to know as to what that risk is, because generally when it's a high margin, high ROE business, and there is no moat per se, what stops others from coming in and disrupting it? And you as an investor then sit with the risk of buying into such businesses. Now, the sixth piece is with regard to renewable energy. I want to understand capex, business plans, margins, all of that. And the last piece is risk of inflation on margins. Now, of course, most of their contracts, my understanding is, are hedged, which is that any increase in raw material prices are passed through straight to the customer. Or the government, which is the customers, mainly the government currently for them. But I'd still want to kind of clarify this, if at all they're assuming any of these risks on their books, because that will impact them. Of course, no question with regard to GST here much, but GST on cement, if at all, could be one relevant point here where margins is concerned. Only positive, not negative, but broadly that's how one looks at it. Now let's talk about the company, and Anushi, you want to kickstart that?
Right. So as you mentioned, and as we started the show, now this is one of the players in the water and wastewater treatment company. It has a lot of verticals in terms of what we are looking at. So if you're just talking about what the company essentially does about its products and services, it designs, builds, operates water and sewage treatment plants is what we are looking at. But Harsh, you know, a lot of emphasis is in the types of treatments it does, right? Because that encompasses about the 30% margin that we are looking at. So it is currently focused exclusive on Indian government-backed projects. The impact on this, you know, visible on the cash flow side that we'll talk about later, but let's talk about the products and services it does.
Yeah, right? let's pull that up. So sewage treatment plants, it's of course clean sewage for safe discharge as well as reuse. That's what they look at. Then there's common effluent treatment plants where effluents are treated and industrial wastewater is actually treated and made better so that it can be discharged correctly. Then there is water treatment plants itself, which make raw water fit for drinking or industry use in various places. You've got water supply schemes. You build a pipeline, water supply infrastructure and the like, and most of this is government backed at this point. You've also got a lot of O&M contracts which they have, and the O&M contracts actually run longer term, and by longer term I mean 1 to 15 years. So you've got these very, very long drawn contracts, good visibility, all of that within this O&M basket. And then you have renewable energy. They've done this from 2025 onwards, and where they operate and run solar power plants. They've got sub 100 megawatts of plants that they run currently, but nonetheless, this is an emerging business which could well grow and become larger and take a larger piece of that top line. The product mix, let's pull that one up as well. Construction and EPC is around 87% of the revenue at this point. So around 850 to 900 crore is only this. O&M is just 3%. HAM and annuity contracts are around 9%. And pretty much all the revenue comes only from India. So there's also that export opportunity, if at all that opens up, could well be a big one if they are able to tap into that well. The top states currently, Rajasthan, Madhya Pradesh, UP, those are the ones that they absolutely focus on. So broadly, this is all about Enviro Infra. Let me start off by also analyzing the metrics now, and we'll talk about the 8 metrics today. We'll start off with the income statement, balance sheet, cash flow, return ratio, shareholding. There's no street cred, but we will talk about valuations and we'll talk about outlook. So that's how we'll cap off all of the 8 metrics. Anushi, income statement.
Right. So income statement, as we are looking at, the 3-year CAGR in itself is pretty strong, is what we are seeing, a 68% of a revenue CAGR just in these 3-year period itself. So strong growth trajectory for the company continues. And what is interesting over here is on this kind of a already high base of growth that we are seeing, the company anticipates a 35 to 40% of a growth further. And this is excluding the renewable energy vertical that we are looking at. So how growth pans out in the next 1 to 3 year period is something which is interesting to watch out for the company. Margins also, if you look at, have more or less remained in the 20 to 24% of bracket, which the company expects to stay even in the upcoming years itself. Net profit also has seen about a 72% CAGR over this 3-year of the timeline that we've picked out. In terms of just a Q1 wrap up as well, the company saw about a 17% of a revenue growth, which margins at 27%, seeing an uptick of around 165 basis points, and net profit seeing about a 36% of a jump. And this is interesting considering the order book positioning that the company has. If you look at the order book, now this stood at about roughly 3,000 crore. This is as of June 25 if you are collecting. So this is on the top line of about FY25 top line if you take of 1,066 crore. So almost more than a 2.5 times of a book to bill ratio that we are looking at. The management anticipating new order inflows worth about 2,500 crore. They've already clocked about 1,178 crores in the first quarter itself. So healthy trajectory is what we are looking at, Harsh, in terms of where the income statement goes.
Very healthy, and the balance sheet doesn't look too bad either, Anushi. You've got around equity plus reserves of around 1,000 odd crore. Let's pull up the balance sheet, and we've got borrowing of around 230 odd crore. So not looking all that bad. When you're looking overall though at the cash bank balance is healthy because of the IPO, of course, all of the proceeds coming in and sitting in the balance sheet. But what you want to also look out for is a couple of other numbers. When you're looking at the working capital requirements, they are quite large. So you've got 200 odd crore of trade receivables sitting there. You've also got other working capital items which are sizable. And then you have a cash balance of around 500 crore to kind of offset that. So no concern here per se, but just that receivables number, that's impacting the cash flow as well, Anushi.
Absolutely. That's where we are seeing the major impact in FY24 and FY25 periods as well. Now, if you look at cash flow from operations, negative numbers is what we are seeing on the screen. And this is not just, restricted to Enviro Infra that we are looking at. For other water-based companies, as water infra-based companies as well, we have highlighted a similar sort of a concern here. Now, this is also on account of, certain delays regarding particular projects from the state government. This includes Jal Jeevan Mission as well, which has led to this kind of a cash flow impact that we are looking at. Net cash flows, however, for FY25 on the positive side is what we are seeing. But this continues to pose a concern for the business for the upcoming years. Now, whether there would be improvement in FY26 is something that we should be watching out for, considering that the Jal Jeevan Mission project, which early had a couple of headwinds, now that has started easing off. So we would like to hear the management commentary on the same. Even the net working capital days, if we are looking at, that remains on the higher side at 90 days, Harsh. So even that is somewhat of a concern for the business, right?
Well, surely is. And what are they doing to repair that will be the crucial question. I did mention in what I want to know that this is a 30% plus business. It's not, it's a 25% business, but
right.
The ROC numbers are very, very healthy. In fact, before this equity raise that they did, the return ratios were extremely strong. And that's what I was actually alluding to. You look at the way in which the return ratios were till FY24, 30% plus is what I was referring to in terms of the return ratios. And anyone doing that kind of a business is a business which could get disrupted by some of the larger conglomerates which could come in and take this as an opportunity. So that is what I'm trying to understand, what's happening on the competition front. But on the return ratio front, really no concerns. We have to give this one a thumbs up. Very, very strong return ratios. The ROEs, the ROCs look quite healthy. Anushi, on the shareholding.
On the shareholding also, we are not looking at any concerns as such, with the promoter stake remaining at over 70%. And this is with FIIs and DIIs having about 0.65% and 2.7% as of June 25 is what we are seeing. But it's mainly on the back of the promoter stake that we've given this one a thumbs up, right?
Yeah, absolutely. It's the 70% promoter stake, which kind of gives you comfort that there's enough skin in the game. It's a 4,500 crore company. Promoters owning nearly 70% is quite decent. Now let's talk a little bit also about the street cred. And this one, the IPO price was sub 150. It listed at 200 plus. It closed at 200 plus after the first couple of days of listing. It settled there, currently sitting at around 250. So it's given very, very decent returns. The bankers to the issue as well as the promoters to the issue have given enough or left enough money on the table for investors. And that's why we give this one a thumbs up at least. But of course, it's a very, very short period of time that we've seen the kind of rise that we've seen. And therefore, you want to keep that in mind if you're a potential investor or you're already invested. But Anushi, on valuations and outlook both.
So in terms of where the valuations are, we've given, if you're comparing with something like a Concord Enviro and Denta Waters, again, similar kind of, ratio, number that we are looking at in terms of where the current multiple is, 21 times is the ratio, which is net in line. So hence, we've given this a neutral rating. But do note Enviro Infra, 35 to 40% of a growth also that the company anticipates going forward. So higher growth over there, and 21 times not still attractive in terms of where the growth multiple is, in terms of, and this is in line with the kind of outlook that the company has given, wherein, we've already talked about this 35 to 40% of a CAGR growth that they're anticipating, with margins remaining in the 22 to 24% of range. And this 35 to 40% is excluding the renewable energy pie that the company is pouring into now. In terms of order guidance, also the company anticipates about 2,500 crore worth of inflows for the year. And this is against the pipeline of 5,000 crore of bids that the company has submitted. So interesting set of data in terms of how the outlook is also going to be for the company, right?
Very interesting. 5,000 crore of bid, 2,500 crore of potential order book additions, and 1,000 crore of revenue, 1,100 crore of revenue trailing 12 months. Looking extremely attractive. Let's bring on board Mr. Manish Jain, Managing Director, Enviro Infra Engineers, to talk to us about exactly this. Of course, the ratings will flash on your screen, the KYC rating. Sir, let me first ask you with regard to cash flow. Talk to us about what is happening on that front. Is that just part of the business that you do, and or can we see some bit of an unwind happening there? What are the measure steps you're taking with regard to getting that to improve, if at all you can?
Good morning and
Good
thanks a
morning.
lot for having me on the show. First of all, if you see to the cash flow of the company for FY25, the OCF pre-tax is positive and we are positive by somewhere around 25 crore. OCF post-tax is around 47 crore negative. It is means as the cash flow statement shows, there was a payment of around 70 crore which was received on 7th of April from the JJM projects. So if that is taken into account, definitely the cash flow OCF post-tax is also positive. Now, if we look into the working capital cycle of the company, the prudent working capital cycle, which we understand, is somewhere around 90 days. So, if there is any improvement to the tune of maybe around 15 to 20 odd days, so that will transpire into having positive cash flows from operations. And we look forward to managing the cash flow from operations. The situation is quite positive, even on the JGM projects wherein we are executing. My total balance order book from JGM projects is somewhere around 137 crore now. And we are receiving the payments as and when we are submitting our bills. Apart from this, under Amrut and Namami Gange, there was no issue even in the past, and we are getting payments regularly. So, cash flows in the company are quite at a healthy position, and we understand that even in September, when we'll be coming out with our balance sheet, these numbers should get healthier in further as well.
Okay, so that's in terms of cash flows. Just a follow-up on that, Mr. Jain. This is Anushi joining in as well. Majority of your projects, if you're seeing, if not all, the contribution is from the state government. Does that pose a concern in terms of, where the cash flow numbers are also there? Because, we've seen a couple of delays in terms of payment-related issues which were there last year. So just want to understand on that part, are you eyeing for a higher mix from private companies going forward, as that would ease some bit of concerns related to cash flows which are there?
First of all, I'll talk about the order book. Basically, our entire order book is from the government sector and from state government departments, whether it can be PHE or some water supply and sewerage boards, or maybe industrial development corporation. So if we are doing any of the industrial common effluent treatment plant projects, so basically it is from the industrial development corporations, which are government bodies itself. So we are having all the projects from any government body or government entity. Now, as I talked about the cash flows, basically there was a slight challenge in the JJM projects. We were executing these projects in MP. The situation improved quite decently from December 2024 onwards. And by March, we were quite comfortable. Cash flows were smooth. And apart from JHM, we were not facing any issues either from the Industrial Development Corporation projects or AMRO 2 projects or NMCG projects. So that way, our cash flows, these were quite healthy. The company was growing. We have grown at a decent rate with healthy EBITDA margins and profit margins. So we look forward to continuing in a similar fashion. If I see to the order book from JJM, it has got reduced drastically now. So we are having a majority of our order book either from NMCG or from AMRO 2. And then one of the biggest project that we have got in the CETP segment, it is for MIDC, Maharashtra Industrial Development Corporation. So that way we understand that the cash flow will not be an issue going forward, and in the coming years, our OCF should turn positive post-tax as well.
Okay, point taken. JJM is Jal Jeevan Mission, as one would understand within water infra. Sir, give us the perspective, 1 to 3 years. Where do you see the top line number go? You're currently at around 1100 crore. You've guided for a 35% growth on the existing business, not on the renewable energy, etc. Only on the water business. in FY26. Where does the existing business go maybe in 3 years? Give us that perspective, slightly more zoomed out.
Uh, as we understand that a growth of 35 to 40% CAGR is possible. So if I say a number for FY 2030, so I can surely expect that we can grow at least 4x from the water and wastewater treatment business. If you say for the next 3 years, definitely we could be somewhere in the range of around 2.5x the current turnovers, 2.5 to 3x of the current turnovers. This is what we do expect. And we will be in a position to maintain the margins which we are maintaining right now and for the past 3 to 4 years.
2.5 to 3x or 4x? Sorry, just trying to get this.
3 years it will be 2.5 to 3x.
Got it.
And if I say the number by 2030, it should be somewhere 4x.
Understood. With a 22 to 24% margin, and that's on the existing business. What about renewable energy? How much does that add to your top line correspondingly? Can you give us that perspective?
Right now, we had purchased 2 assets, out of which one was at Odisha, which was a 40 megawatt project in which 24 megawatt is already installed, and wherein the generation is already happening and a revenue generation of around 16 crore per year is already there. So we are just upgrading that particular asset to 40 megawatt. This is one. And second, in the second project, we are installing a 29 megawatt solar power in Maharashtra under MSCDCL, wherein SFA of 3.2 crore is available. So basically, first of all, what we are looking for is we do have the estimates available for these two projects, wherein we are having EBITDA margins in the range of 18 to 20%. And then on the SPV side as well, we are expecting to maintain IRR in the range of around 13.5 to 14 odd percentage on a continuous basis. So basically, based on this, we will further enter into the renewable sector, looking into the growth and how we can add value and create values for our investors in the company.
Okay, Mr. Jain, also just want to ask a two-part question. You mentioned that most of all your contracts, if not, are from the government side. This includes the central and the state government as well. Just want to understand in this next 3 years of a period as well, what's the kind of mix that will help? Would it be continue from 100% contribution from the government side, or are you eyeing a private mix as well? And in terms of even the competition, how are you stacked against it, in terms of where these order inflows are concerned from the government?
Basically, what we can understand is majority of orders will continue to be from B2G segment. So basically, it will be the government sector from where we'll getting the orders. However, we look forward to B2B segment as well. So various refineries or these thermal power plants which are coming up. So we look forward to some projects which will be coming up in these sectors. So we'll definitely look forward to such type of projects as well. But our main revenue mix, as we understand, will be from the government. We further look forward to some overseas opportunities as well. So that mix, if I say, there may be a slight shift from the government, but predominantly it will be government sector.
Point taken. And so what's the split like, renewable versus other? You spoke about a 13.5 to 14% IRR on the renewable. What's the capex plan there like? How much are you planning to invest over the next 2, 3, 5 years? And how much of, say, for example, you are at 1100 crore today, of course, in terms of top line. By FY30, you'll be at 4400, 4x. What will the renewable share be above and beyond that 4400? Give us that perspective.
In the renewable segment, there has been an investment of rupees 75 crore from Enviro Infra, and Enviro Infra is 100% subsidiary of this renewable business. Apart from this, there has been a total investment to the tune of 120 crore in the company for acquiring this asset of 40 megawatt. So the actual cost of that asset was 115.6 crore. So basically, first of all, we have invested this much. Then we have clarified that going forward there will be a cap of this 75 crore and there will not be any further investment from Enviro Infra, since Enviro Infra in itself has to look for the growth which it is having in its water and wastewater business. Now, if I look forward to, then definitely the term loans for the asset that we have procured, the working capital limits, and then investment from the promoters and shareholders. Based on that, we will continue to invest in renewable business, and then we look forward to growing organically in that particular sector. Right now, I cannot give any numbers. For this, I had earlier confirmed the same thing, that by December we'll be in a position to finalize, means how we look forward to growing in the renewable sector and how big we can look forward in that particular sector along with the water and wastewater business.
Understood. Sorry, sir, just one quick question. I have only 20 seconds. How is competition, sir? Is it very, very strong, or are you able to do fairly well and coexist well?
First of all, since there was no tendering in the last 1 year, which was an election year, and then the tendering, this started with effect from January. So definitely there was a slight competition in the initial months, which we do expect, because all the companies were looking forward for the new order book in their kitty. And when the demand supply gap, since there are number of projects which are coming up, so we look forward to this competition that getting subsided at a decent level, and then definitely there is a level playing field at which we are operating. So at that level, we can say there are 10 to 12 players. So fairly, we are available in that particular segment.
Okay, point taken. So competition is coming through, but you're expecting it to moderate as the year goes by. Thank you so much, Mr. Jain, for coming and speaking with us. Completely out of time on this edition of KYC. From Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay with us on NDTV Profit.